What's up, everybody? Today I'm going to review about what's gonna happen, in my opinion, not financial advice, with my predictions in the near future. Basically, this has happened already. Rates have gone up and then they have kind of flattened. Unemployment has gone down and it's kind of creeping up. Stocks have come down and back up with the pause, the anticipation of a pause. Stocks have kind of come back up. Inflation has gone down thanks to interest rates going higher. So this is working, which is causing this to worsen. But what we care about is stocks. This is for people who are, this is not for anybody actually. This is not for you. This is just my opinion. I only care about what's going to happen to stocks because I get involved with stocks. Inflation is what's trying to be controlled. What these two things are gonna determine this, right? Or they kind of go hand in hand. If inflation does not go to the 2% mark, the 2% target, we're trying to get there. If it doesn't get there, then this may have to rise, but it's very unlikely. Maybe I think we'll just get flat until this happens. If this just stays flat until we're waiting for this to go down, stocks will just be sideways. Unemployment will also be sideways until we see inflation eventually reach the target. Until then, unemployment will decrease, rates will start to drop, and stocks will start to go higher. But for stocks to go lower, I don't think so. For stocks to go lower, this would really have to be break. Like this will have to not work, which we have seen that it's working, unless there's some kind of random mistake in their calculations that no longer will interest rates work as a tool to control inflation. With that being said, if rates do not work to control inflation, then there's pretty much no other option but to increase them, leading to unemployment really going higher, leading to inflation, or this will lead to a recession. And essentially a recession will be good because temporarily stocks will go down for a little bit. Okay, there's recession fears. We're technically kind of in a slowdown, in a little slump. With recession in mind, people are saying, okay, well, then stocks, it's gonna take longer for them to go higher. Therefore, let's park our money somewhere else where we do get a return. This could be either more treasury, bonds, all that stuff, and the money will go there, stocks will go down. It will be harder to borrow money for companies that expand, like tech companies or new companies that are disruptive in a way that's like innovative. Those companies that need money to expand will go down, and it will just be until we reach inflation 2%. Let's say we do reach 2%. Will it stay there? I personally think inflation is hidden. Inflation is not really calculated how it used to be calculated. You know, over time, inflation 2% will reach an exponential type of growth. No matter how much interest rate anything has, it will reach an exponential. It is exponential, essentially. So, you know, in the 1900s, let's say something that costed 1 penny, and it stayed pretty flat with 2% inflation, eventually starts curving up. Eventually, right? It'll take long, very long, but over time, 400 years from now, those prices will just gap. And as long as our wages are 2%, as long as everything else goes up by 2%, we're good. Stocks will go up 2%, but if they're not, then there will be that wealth gap, especially in California. Other states in the United States are pretty good, but anywhere else, if wages do not catch up to inflation, then it's bad. People are going to be mad. It's very unpredictable, yes, I know. And this is a messy demonstration. But from a stock trader's perspective, somebody that tends to lose money because I get scared, is that what would I do? I look at stocks and I say, well, on the short term, the near future, for example, if it's very short term, within weeks, days, I want to know what kind of movement there will be. If we're in a situation where we don't know, then the market's gonna be I don't know, and I'm gonna trade as if I don't know. So I'm gonna take scalps. I'm gonna be like, okay, well, I'm just gonna trade very small in small ranges unless there's news like Fed Chair Powell speaking and hinting at a rate cut, hinting hopefully not a rate increase. If it does, well, we could still make money from that, right? So traders, be aware about the situations. Employment is a little bit just kind of creeping higher, but in a way, it creeping higher is a good sign because that just means the inflation rate should reach its target. And if that's the case, then rates should start to come down, and then unemployment starts to come down, and then we're back to normal, right? We're back to normal. Stocks continue higher and doing their normal thing. Companies start to borrow money at normal paces, and essentially, just stocks are in a positive trajectory. So essentially, ideally, we want rates. Ideally, we want rates to be low. We want unemployment to be low. We want stocks to have a steady growth. And we want inflation to just be flat at 2%. So ideally, in the ideal world, that's what we want. Just consistency. Right now, we've been, in the past, 3 years, we've been in a period of very crazy fluctuations. And whether you say it's a recession coming, blah, 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 worry about what's happening to you overall. For me, how has all this market affected me? Well, not really. Like I trade. I'm not an investor. If I'm an investor in terms of like a 401k, I don't care about this. My money is just gonna go in and in. Over the long term, I'll be fine, in my opinion. If you're a real estate person, then you go by different ways. If you're a real estate person, either an agent or whatever, you're gonna be looking at rates because you want to find out if it's easy to borrow money to just start flipping or buying rental properties. But as a trader, my focus is mainly just scalping, trading, day trading. I'm just looking at what is the environment like. Which environment are we in? We're currently in this environment. Which environment are we heading into? So depending on what they say about rates is kind of the movement we'll get in the markets as people are just anticipating what's going to happen. For example, there was a meeting not too long ago where people are asking questions to people in the Fed, like, hey, how do you see rates in the near future? And if they just the people in charge hint at a rate cut, stocks just go up. Like, they go up for that day. They don't go up forever. They just go up that specific day a good amount. But any other day where there's no news, they just tend to just chill at a range, right? So this helps me know, well, where are we today? Are we still in this environment? Have we switched environment? Are we in a decreasing rate environment? A decreasing rate environment, I'm going to be more bullish. At an increasing rate environment, I'm going to be bearish. Unless there's a hint that they're eventually cutting. So I essentially start to switch my mind to bullish. Or I could just be an independent stock trader, like trade just news for every freaking stock. I don't care what's going on, but if Disney says something about so-and-so, okay, I'm just going to focus on that. If that news is bullish, then I trade bullish even though everything else is bearish. So I just go based off whatever's out there, and I just mostly focus on Tesla and SPY. Tesla, because it's the one that has the most attention. People pay attention to it because it's a stock that has a history of making crazy moves. It won't probably be as crazy as before because it is not diluted. It is, there are more astounding shares out there, so the price movement is less, the volatility has decreased, and that's pretty much it for this video. I don't know what else to tell you all, except that, you know, depending on where we're gonna go, my prediction was that we're flat until we see consistent 2% move. So I just see that we're just gonna be sideways for a good while, or sideways to bullish. So I predict it's gonna be more of a, stocks are gonna be more like sideways but upward sideways, right? So the trend is a little higher. So sideways but upwards, unless there's individual stocks that have their own news. And what else? Yeah, sideways up. I don't think rates are gonna go higher. They're pretty much flat. Once they start cutting, I mean, yeah, now it'll be even more sharper moves in a bullish direction, and things will be more normal. And now people will be like, okay, let's stop focusing on overall market SPY and start focusing on individual stocks, and we're back to a healthy economy. So will we reach 2%? I think we are. You know, I'm not gonna be that pessimistic and like, oh my god, we're doomed, unless there's other outside stuff. So we already seen wars happening: Ukraine, Russia, Israel, Palestine. The thing that people that are bearish tend to be scared of is the US dollar. And if the US dollar is under attack, then it is weaker. If it is weaker, that means inflation shoots up. In my opinion, inflation shoots up because a weak dollar means that it requires more money to buy less of an item. So if less people want our dollars, that means we are left with more of our dollars, and there are more dollars in our circulation, then that results in things costing more because now there's more money around for no reason. So inflation is something that the pessimistic economists, or, you know, I could be completely wrong, they could be completely right. Eventually, yeah, I think this empire will kind of reach a point where it's like, okay, we've been printing fake money for the longest time. It's gonna eventually hit a wall, and this 2% target is no longer gonna be a thing, and maybe the new normal will be a higher inflation rate of like 5%. Everything costing 5% more each year. Your wages going up 5% each year. 5% inflation, until inflation keeps growing at an exponential rate, which is kind of scary. You know, not only do prices grow exponentially, but inflation rates themselves could possibly, in a runaway inflation, could grow exponentially. So that's exponential growth squared. I am not an economist, by the way. And that's pretty much my summary. Unemployment will do like a little fake out, like, oh, we're gonna go up, but not, haha, psych, go back down. Yeah, and this happened in the end of 2018, where from 2008, that financial crash y'all know about was pretty bad. everything, like once that ended, everybody got bailed out. We just saw stocks going high, 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 until in 2008 there were rates being just increased and stocks started to plummet a good amount. I think up to like 20% overall. And then the Fed decided, okay, well, stocks are being affected. Let's cut rates. They started cutting rates. And by cutting rates, or even the hints that were cutting rates, stocks started shooting up. So just the thought and the anticipation that rates are cutting, things go down. And that's when eventually the next year, the pandemic happened. And that pandemic pretty much scared everybody. And there was a huge sell-off. So people, see that as like, okay, very uncertain, very like out of nowhere, sell, right? Sell. But we will buy once we hear there's another type of bailout. Money printing, giving money, help, free checks. You saw that in 2020. All that stuff bounced the market way back up again, like even higher to new highs. So with that being said, you already know, government prints money, stocks go crazy. All right. Government decreases rates, stocks go up, but not too crazy. Steadily, but overall they do go crazy. But like cutting rates and adding money to the economy skyrockets stocks like crazy. And when what's the opposite of that? Well, there's like the economy goes through a curveball, like the black swans. 2008 was a black swan. Pandemic was a black swan. The 2000 .com boom was a swan. So other than those swans, we have, the recoveries, and we have the steady recoveries that lead to steady bullish markets, I guess. That's it. So after doing this video, it's kind of helped me see what I'm going to plan to do in the future when it comes to trading. Is for me personally, not financial advice, is that I'm seeing, yes, we are flattening out, which we're anticipating cutting because we're reaching 2%, regardless of unemployment creeping up, regardless of this. Because even if it goes up, it's still a good sign and a reason to cut rates. Obviously, if unemployment goes up, that's good because that means inflation will come down faster. At least that's what they want to happen, which will then give them a reason to, hey, okay, now it's okay to cut. So I'm in an environment where I think we're starting to head up. We're being a little bit more bullish. We're in an environment where when it does come down, I feel like it'll just go back up. So those companies that I feel that are having to borrow money, I am basically front running the fact that they will be able to have access to cheap money in the future. So with that being said, whenever they drop a little or drop some in a day, for me, my strategy is when I see them dip in a day where there's no news. If there's news, I'm going to trade that news. But if there's no news and they drop, and then they stick around the average percent move per day, then I will probably end up buying the dips, buying the down sells, or if it holds a level, from that level, I hope to see it up. So I'm overall bullish, unless I see otherwise. What will shift my mind is that the Feds will start to sound bearish and saying that, okay, you know what, we were wrong. If they said they're wrong and that basically inflation is not going where they want to, and they will, pump up in interest rates, then yeah, that's something different that hasn't really happened within the 2 decades that last 2 decades, last 3 decades, I think. But if that's the case, then yeah, okay, now I'll shift my mindset. But I'll leave you all with that. Have a great day. Do not follow my tips. These are just ideas for me and my thought process. Bye bye. So the worst case scenario is what the pessimistic economists say is that the dollar is going to be worth less and less, which it already is, right? But they say in a very rapid rate, which makes it very unsustainable. Who's gonna want to hold it? Yes, your wages might go high along with inflation, but at which point does it stop, or does it just run away? And everybody, as soon as they get their money, they're gonna spend it because everything else is gonna be expensive later on. So, is it sustainable? No. The long-term inflation is not sustainable when it's exponential. It becomes unreliable to hold. People are gonna rather borrow money instead of like working or using their profits to grow their incomes or their company's expansion, even more so. But who's gonna even want to lend out money for that? Because if you're lending out money, you're not gonna get back a return compared to the inflation. So if I lend you $10 a year from now, those $10 are going to be worthless to me in the next year if the inflation rate is 100%. I mean, that's extreme, right? So if I get money back to break even, you have to give me 20 next year. That's for me to break even. If you give me 30, okay, I'll make some money, right? But people who willing to take their risk, I guess, will. Bartering will be a thing as it is in Zimbabwe. I'm not being part of the pessimistic people, but anything is possible. Gold is, one of the things that holds value, that doesn't deteriorate. Stuff that doesn't go bad. Land doesn't go bad, which could be used for producing food over and over. But that's going to be difficult. How do you make it profitable? You have to charge customers an amount that makes you break even at least. Yeah. So I don't want to scare anybody. So see y'all in the next video. Bye-bye.